Hi viewers, welcome to Mantan TV. Today we are with K HANMANDLOO sir. Today's topic is investment via SIP. Sir, good morning sir.
Good morning.
So what is SIP sir? SIP. What is
Systematic investment plan,
Okay.
just like recurring deposit.
Recurring deposit.
Every month 5,000, 1,000, 2,000, according to their convenience, anybody can deposit into his account. That will be invested in mutual funds. Systematic investment, that is called systematic investment plan. Generally, retail investors and those people who are having savings, instead of keeping in savings bank accounts or recurrent deposits accounts, they are shifting their money from savings accounts, debt funds.
Okay.
Debt funds means just lending, and there is no saving bank, so only they will get interest. Because of good performance of stock market in India, these people are converting their savings towards mutual funds, investment share market from mutual funds.
Okay, what is different between SIP and mutual funds sir?
Yes, it is a mutual fund is one way of mobilizing funds is through systematic investment plan.
Okay.
Either if you want, in mutual funds is like this. If you want, you can invest 50,000 at a time, or you can invest 2,000 per month also.
Okay.
That is systematic investment plan. And for lump sum investment at a time is at a time investment. According to your convenience, you can invest. But systematic investment, every month you have to go on investment regularly, and they will invest that money into the share market.
Yeah.
So these systematic small people, those are having small savings, they are investing in systematic investment plan to invest in share market through mutual funds. Nearly during this
What is this equity mutual funds?
equity mutual funds means share market mutual funds.
Okay.
Debt funds also will be there. Debt funds means loans,
Okay.
means that bonds, debentures, deposits. That is debt. There is no risk taking by the depositor.
Okay, depositor.
He will only interested in getting the interest and repayment after some time, maturity. But in the case of share market, he will be the partner in shares of profits and share in losses.
Okay.
And they are also partners in prosperity of the company, loss of the company. So based on their investment in share equity funds, their unit value, that is called unit value. So after investing so much of amount, they will be allotted units by mutual fund. The unit value increase with the increase in the value of shares invested by that mutual fund. So as soon as the share price increases, the mutual fund assets value increases. That will be increasing the units value of units held by individual contributors. Maybe systematic investment plan or fund mobilization. And in the month of July itself, the systematic investment plan could reach 40,000 crores compared to 37,000 crores last month. In the month of August, in the month of July, 40,000 crores received through systematic investment plan for mutual to invest in in equity market through mutual funds.
Mutual funds. Okay.
In the previous month, it was 37,000 crores. Means during this 1 month, 3,500 crores more systematic investments received through systematic investment plans by mutual funds.
And this strong flow has increased, sir, through the stock market.
Stock market, because of the increase in the share prices, many people are trying to take chance of winning more.
Okay.
Because those people have invested 4 years back, around 20 rupees or 30 rupees. BHEL, one of the example of Hyderabad, it was trading at around 40 rupees, 2020. Now it is 380 rupees. More than 350. At 10% that side, it trading around 350, 360 it is trading. Means within 4 years, 40 became 360.
360.
Not every case, but this is the one example I am saying. Some cases there are only double over one time, only 2 times only. So some company shares has increased 5 times, 6 times also. This is the advantage of taking risk. Of course, there may be, if the share price comes down, they lose the money. So this is the way a large number of investors are turning their money savings into into mutual funds. To invest in equity funds in share market. Debt fund means loans or deposit, but share market means equity fund is share market.
What is this NFO, sir?
New fund offers means these mutual funds will give just like schemes. If you invest this much of money, this is the time they will give some options to investors. Means deadline.
Okay.
After this, you may lose the opportunity. The scheme may be closed, or new scheme will be introduced. That is the process of mutual funds. Every mutual fund will do to attract the investments. Even in this period, in the month of June also, in the month of July, debt funds. I told you debt funds means deposits, debentures, bonds, giving loan to companies. That also increased by nearly. That also increased last month, July. Even debt fund also increasing. Means investors are saving, people are converting their idle investments into financial assets.
Okay.
Maybe gold or plots, they are selling plots, gold, or any other property, they are investing in share mutual funds or debt funds.
And what is this difference between multi-cap and small cap funds, sir?
Mid cap means the equity fund which invests in medium class companies. Small cap means low investment companies.
Okay.
Low turnover, low capital, the small companies. Sometimes these small companies have become highly profitable. I told you one example. Switzerland was there in 2019. The share price was 9 rupees, 10 rupees. Now it is 60 rupees.
Okay.
More than 60. Now it is around 70, 80 also is going. So in the same way, that is small cap. It depends upon the capital held by the company. Mid cap means above small cap, and large caps. That is middle cap companies. So those who are investing, generally the mutual fund will decide where to invest: small cap, medium cap, or large cap. They will distribute the funds in different segments, and also according to SEBI guidelines, they cannot invest more than some percentage, maybe 5%, 10%, or 20% in one group of companies, or 10%, more than 10% of their own deposits into one group of companies, so that to reduce the risk, to protect the investors' money. So SEBI has prescribed some guidelines that they cannot invest money at more than this percentage in single group or single sector also. So this is the way how these mutual funds are regulated by the SEBI. And this what is happening is,
then what is this debate-oriented scheme, sir? Debate-oriented scheme.
Debt-oriented scheme. Debt-oriented means that is I told you these what are the schemes. The debts means maybe large mid-cap schemes attracted, and one thing is debt-oriented schemes. I told you deposits, bonds, and debentures. This is called debt-oriented fund. Means loan. We are giving loan. So that also, even that also increasing its contribution. People are contributing more for even debt funds also. And some companies, some mutual funds invest hybrid. Some they invest in equity market. Some invest in debt funds also.
Yes.
Some mutual funds will invest in debt funds, equity funds, as well as government securities also, to reduce the risk. Even some companies will do investment in gold bonds also. It depends upon their funds availability and permissions, according to the permissions given by SEBI. All these things will be depends upon the funds they are having, so available of options, and they will distribute the risk also. So that is the advantage of investing in mutual funds. There are so many funds like balanced advantage funds, equity saving funds, hybrid funds, hybrid space for advantage for infra funds, infra, all these are called the saving, one of the financial asset schemes. This one I'll tell you. And one of the liquid money market was strong close valuation stocks. So this is encouraging because of good prices, share prices. People are investing in this mutual fund companies. And important mutual funds in India are ICICI Prudential, Energy Opportunities Fund, Edelweiss Fund, Business Cycle Fund, Kotak BS, Kotak BSU Fund, Motilal Oswal, defense funds, Tata Nifty funds. All these funds will do investments in markets, maybe equity, debt, or other assets also, maybe gold or infra bonds like that. Multi-cap funds also there.
Okay.
Means some mutual funds will invest some portion in large caps, some portion in mid caps, some portion small caps, so that assets are the funds are divided to all sectors, and sector wise, capital wise, and as well as maybe equity fund, debt fund, or gold funds also. They will invest like the infra funds. All these things, multi fund, multi sectors. The mutual fund will invest based on the permissions according to the rules framed by the SEBI guidelines. They have to, all mutual funds has to act according to the guidelines issued by SEBI. And the mutual fund depositor, investor, will get is a dividend, and if the price increases, if he wants to sell, he can sell and he can encash his money, just like share money. Just like share, he can sell his units. That is called units. They can every mutual fund investment called unit. The owner is unit holder. He can sell his units as and when. And every bank is having that mutual fund sector. Every bank.
Okay.
In addition to other companies also, Tata is there, Mahindra, every company is having mutual funds also. All these insurance are investing, and because of the good prices, people are investing in share market and diverting all the other assets funds to share market side from mutual funds. So this is happening in India. Lakhs of crores is being converted to financial assets. See, even debt funds also getting interest, means attraction, because the debt funds are offering good revenue also, good interest compared to bank deposits, post office deposits. They are giving higher rate of interest. Even senior citizens, those people who have sold the property, they are having funds, they are also investing in. If they doesn't want to take risk, they will go for debt funds. If they are ready to take risk, they will go for equity fund, mutual funds. And even mutual funds also having dedicated funds also having separately. Infra, they will invest only in infra projects, and they will invest only in PS, public sector bonds. They will invest only in government securities. They will invest only in share market. They will invest only in debt funds. Different sector, different mutual funds. We can select which company I want to invest. Or we can go for multi-cap also. Multi-cap, multi-sector. You can go for the mutual fund which invest in all sectors. Also, that is an individual choice of an investor who can select in which sector he wants to invest, or he can go for he can go for investment in all sectors or through the mutual fund. That possibility is there because of this flexibility, and every day you can know the value of your unit invested. Yes. Suppose you invested 10,000. Tomorrow you can know is it 10,000 or 9,900 or 10,100. It is based on the value of assets held by the mutual fund. And also you can get dividend as and when the company declares dividend, the mutual fund will get money, and that will distribute to the unit holders. And that the advantage is there. Because of this reason, and the transparency, and one more great thing is transparency. Means every unit holder can know what is the investment, in which company, in which equity company the mutual fund is investing, or else if he is not satisfied with the selection of the company invested, they can withdraw the money, they can sell the shares, units, and they can withdraw the money. So that option is available. So because of all this flexibility, transparency, liquidity, income, safety, And analysis also will be done by mutual fund only. The individual investor may not do any analysis. This is helping the people to transfer their savings into equity markets
Yes.
as well as debt funds also.